In this video, I'm going to share with you our signature strategy that uses just one indicator and delivers results like these. You'll be able to grab over 100 points using just one indicator, the right settings, and the right entry points. You can also use this strategy both on the regular financial market and on the OTC market. I'll show you all the settings and every entry point in this video. So all you need to do is watch this video carefully and then follow all the instructions from it. And you can increase your deposit 5-fold if you stick to all the rules. Of course, there are a few nuances you need to know about this strategy, but we'll talk about those in the video itself. Get comfortable and let's get started. Let's start by looking at a sample trade. Then I'll share all the entry points with you. Which situations should you skip? And after this video, even if you have no experience, you'll be able to achieve the same result. You'll have two very safe and simple entry points, and two that are a bit more advanced. I'll show and explain everything next. So, this is a very simple indicator with very straightforward settings. And as practice shows, everyone in our community who we've shared this strategy with has achieved pretty good results. So you don't need a lot of trading knowledge. You don't need to be super persistent. You can start working right here and now. All you need are the right settings and to watch this video until the end, because I'll be covering all the details and every entry point. And as I mentioned at the beginning, you'll be able to use this strategy both on the OTC market and, of course, on the regular financial market. I'm opening my first trade with 25%, which is $50. And the first trade brings me a nice profit, $43. So, I'll open the next trade with 25% as well. That's already $61. Let's look at another example. Right now, there are very few opportunities on the regular market, but still, I found one on the Swiss franc to Japanese yen. Yeah, actually, this indicator is more tailored for volatility. So, when there's a lot of volatility in the market, we can trade with a lot of confidence. But the main idea doesn't change. If the price reaches the upper boundary, meaning the red zone, we open a sell trade. If the price hits the lower boundary, the green zone, we open a buy trade. So, these are the two simplest entry points. We can also trade from the middle line, but there are three factors involved there. And I'll share those next. So here, there are no special conditions. The price just needs to reach the extreme boundary, either at the top or the bottom, and we open a trade on the rebound. All of this works perfectly on 15-second candles. So you select S15. Then you choose 1 minute for the trade, and you can work comfortably on the chart. We also have a situation. Oh, by the way, the trade closed at a loss. That's unpleasant. There are situations that will be quite unpleasant for us. And I just found myself in one of those situations. Let's talk further, but first let's cover this trade, open it for, well, let's say 40%, and discuss which situations are worth skipping. This was actually one of them. Look, here we have the Australian dollar to US dollar pair. Here, what's happening is that the price is touching the lower boundary, and so from here, I calmly open a buy trade for 1 minute. So, let's talk about the situations that are worth skipping. In the previous trade, there was a very clear example where I absolutely should have skipped that particular trade, but I went in anyway. Look, when the price really sticks closely to one of the established boundaries, say, the lower or the upper boundary, and just moves along that specific line, not trading within the entire whole channel but right along one distinct line, those are precisely the situations you should definitely skip. I didn't notice this pattern in time, and as a result, I paid for it with a loss. So, the biggest drawback of this indicator is that, in the moment, we can't tell when this kind of movement will start. According to statistics, about 7 or 8 trades out of 10 end up profitable. That's actually pretty good statistics, considering that we're using a fairly simple indicator, just one, and working based on it. So, look, right here we should have skipped this movement, yeah. From start to finish. Here as well, the price broke out, and at that moment, we wouldn't have realized that we needed to skip this move, but after that, we could have traded confidently. So, moves like this really do happen. But again, if you see that the price is trading within this whole range, for example, between the lower green line and the middle line, you can open trades anywhere in that range. If you see that the price isn't using the whole range, like here, where it actually broke out past our indicator, then we skip situations like that. I'm covering my loss and let's go for the next trade again with 25%, or actually, let's make it 30%, that's $73. And at the same time, let's talk about the settings for this indicator. And in general, let's go into more detail about how to work with it and which situations you should also skip. And you can get the settings for this indicator right now using the link in the description. I'll leave it in our Telegram channel. All you need to do is go to our Telegram channel and get the settings from there. So, the link is available for you in the description and also in the pinned comment. Go ahead and grab the settings from there. Basically, they're waiting for you there. Use them in practice and, accordingly, make the same kind of profit. But let's keep moving forward. The US dollar to Japanese yen just touched the upper boundary, so I still have time to open a sell trade from here. So look, the most important thing is not that the price was near a single line, but that it made a full move, reached the upper boundary, and that's where we opened a sell trade. That's why this trade should be safe. Let's take a look at this trade, and then we'll move on to how to work with the middle line. Because honestly, it's a very profitable method, but it's much more difficult. But I really think you can definitely quite handle it. This trade brings me a profit of $67. Let's make the next trade for 30% as well. That's already 93 bucks. So right now, I won't be risking anything at all. And let's try to find a trade that we can open from the middle line. Australian dollar, Swiss franc. We can enter here based on the logic of the middle line. Let's break down how this actually works. First, we need to have some kind of movement, either upward or downward, but definitely not sideways. Here we can see there is an upward movement. Second, if we have this upward movement, then the price should only be in the upper channel. So right here, that's exactly where it is. The third point is that the price should drop sharply to our middle line, and then from the middle line we open a buy trade. So there are three factors here. Factor number 1, factor number 2, and factor number 3. Only after that can we open a buy trade. With a downward movement, everything is exactly the same, just reversed. If we have a downward movement, then the price should be in the lower channel. Just like here. Let's wait until this trade closes. By the way, we've got a nice move of 100 points. And then we'll break down this example. Let's see what's happening. We're up 85 bucks. Look, here we had an example with an upward movement. How do you work with a downward trend? So here, we have a downward movement. That's our factor number 1. Factor number 2 is that the price is specifically in the lower channel. And pay attention, it shouldn't just be sliding along some line, like it was here. It should be fully trading only within the lower channel. So, we count all the entry points. 1, 2, 3, 4. For positive entry points, and in this case, we had one negative one. So if we had opened a trade here, most likely we would have ended up with a loss. So here we have 4 wins and 1 loss. That's not a bad statistic either. So you can go on to model these movements, and honestly, it's much safer if you stick to all 3 factors. So what you need is actual movement. You need a full price movement, and for the price to come impulsively right to this point. So here we did have an impulse, but on the other hand, it was kind of weak. So honestly, this is a debatable entry point. That's why you can work with the middle line, but only if you follow all 3 conditions. If we just take the extreme values, we see that we don't need any movement from them at all. We just work off of them, right on the squat. And it's also very profitable. Here, all our trades were in profit. If you find a movement like this that lasts a really long time, then bingo! You can literally make about 10 or 15 positive trades in just half an hour. Alright, let's continue and watch and fast forward as I ramp up my balance. We can even open the next trade for $150 and, accordingly, reach a certain amount. We'll use only this indicator. By the way, right now on this same currency pair, Australian dollar, Swiss franc, we're breaking out into our upper zone. That's why I'm opening a sell trade from here.
Let's watch. Nobody really truly actually likes it, as I just personally feel.
As you can see, the third trade in a row closes in profit. All these trades were basically opened from the upper and lower boundaries. And now I already have $1,000 in my balance. So, as you can see, with just one indicator, you can really increase your deposit 5-fold. To repeat this result, you need to go right now to the link in the description to our open Telegram channel and get the settings for this indicator from there, and then just apply them in practice. It works both on the regular financial market and also on OTC. If there's no volatility, if you see that the price is completely stuck in place, then of course it's better to use the OTC market. If we look at the middle line again, it really does provide amazing entry points. We can also work very safely from the upper boundary, but you need to make sure that we don't have slippage like this. That would be dangerous for us. Also, if you see that the price is stuck in the middle like it is here, it's better to skip such movements as well. Although we did have some really good entry points here. Here, for example, there was a sell entry, here a buy entry, then again a sell, and again a buy. And even from here, we could have made money twice on a sell, and from here, another buy entry. As you can see, there are plenty of entry points. The most important thing is to practice, and there's nothing difficult. I turned $200 into 1,050 bucks, increasing my deposit 5-fold. And I wasn't even trading that much, just about 30%. Yeah, there was one unpleasant loss, but still, it was my own fault. I did the analysis wrong. Honestly, this strategy will let you make money in, roughly speaking, 7 out of 10 cases. And if you also spot these kinds of slippages, then you can close 9 out of 10 trades in profit. So go ahead and click the link in the description right now to grab these settings. If something isn't clear or you can't find these settings, just message our managers. The team will help you out and answer all your questions. I'll leave all the links in the description and in the pinned comment. That's it from me. Goodbye. Don't forget to subscribe to this YouTube channel and give it a like. See you in the next video.